host of the Real Estate Guys radio program, and you'll notice I have the perfect face for radio, hence the reason you don't see us do too many Facebook Lives, but there's a good reason we're doing that today. But first, let me introduce the co-host of the Real Estate Guys, our good friend. He's been doing this a long time. Let's say hi to Russell Gray.
Hey, Robert. Hey, everybody.
It's good to have you here. Happy Friday. If you're watching him on the replay, you should know that today is Friday, August 8th. So we might talk about where, say, the prices of gold are or something like that today, and just know that that's why we're here. But probably the first thing we want to talk about, and hi everybody who's checking in, that's cool, is why are the Real Estate Guys deciding to do Facebook Live? And I'll tell you this, you may have hung around with us long enough to know that we have a television show which gets taped in the studio and then played like 6 or 8 or 12 months later. So on the TV show, pretty much everything we did had to be evergreen. We couldn't talk anything current. On the radio show, it's every week, and it's fairly current. I mean, here we are Friday. We have a show that's about to go out on the radio stations this weekend and to the podcast early in the week, and that's this one of 2 shows that is on its way to you. So if we were to record a radio show today with our guests, it would be 3 weeks until you got it. And today we're talking about something that is more urgent than that, and it's a great topic. It's a salient topic. It's a hot topic, and that is precious metals.
Yeah, I think, the reason that precious metals, I mean, we're the real estate guys, like, what are we talking about precious metals for? But really, if you understand the difference between money and currency, and a lot of people don't, because most of us have only operated in an era where currency has been mistaken for money. We don't have time to go into all the details, but right now, the precious metals markets, the pricing action that you're seeing, if you're paying attention, is telling you there are some concerns about the separation between currency and money. And so if you're investing in real estate, presumably it's because you want to make money. And if you don't even understand what money is or how to preserve the money that you've made, then you could end up thinking you're rich when you're not really rich. So precious metals has an important role to play. We've got some materials and we've done some shows on that, so we won't belabor that point now. But we brought on a couple of great guests who are going to help us delve in to the action in terms of what's happening right now. And so, Robert, we're going to get this thing going.
So if it was just Russ and I, this would be a fairly short Facebook Live about precious metals. I mean, we understand them, we know the difference, but to really get your mind around it, we are thrilled to have 2 of our good friends and guys that have been in the business for decades and decades. Let's first say hello to the editor of the Gold Newsletter. He's also the mastermind behind the New Orleans Investment Conference, our good friend Brien Lundin. Hey, Brien.
Hey, Robert, thank you so much. Thank you for making me feel smart and old at the same time.
Well, you started young, my friend, and you've been in this business a long time. We were remarking before we started live just how uncanny Mr. Lundin gets in his Gold Newsletter. Nobody can predict the future, but the guy's pretty darn good at it. Now, what Brien does is he pays attention to all sectors of the metal markets. That's not just ounces of gold or silver you can hold in your hand, but what happens before you can do that in terms of mining, pulling the stuff out of the ground, junior mining, exploratory mining, all that stuff. On the other side of the spectrum is a gentleman we've known for many years who helps people actually invest in physical gold, silver, and other bullion. He is a precious metals dealer. That's our friend Dana Samuelson. Hey, Dana.
Hi, Robert. Great to see you, and Russ and Brien. Great to be with you.
Both of you guys are going crazy, and I know it. So we sure appreciate getting some time of yours on a Friday. I mean, the last 3 weeks has been a whirlwind in the metals, but it started really before that. Back in 2018, both of you were at our Future Money Wealth Conference, where we spent quite a bit of time on the metals. And, if people had paid attention back then, they'd be sitting pretty right now. But I think the big thing to understand is people that are watching the market kind of have their pulse on it. A lot of real estate investors aren't really paying that much attention, and mainstream media doesn't cover this to the degree that I think investors need to know about it. So, Brien, take us through just kind of where we are in this last few weeks.
Well, where we are is that the world is beginning to appreciate the things that we were talking about in 2018 at that conference. And that's that, back then we were saying, well, the Federal Reserve always resorts to monetary easing, to essentially money printing. The government creates more debt, does stimulus programs. And the next time this happens, they're going to have to do more than ever before, because the markets have become used to, addicted to not just easy money, but ever easier money. So the Fed and the government are going to have to, the next time, whenever it comes, and it is coming at some point, we said back then, they're going to have to do much more to get the same effect. Well, along came COVID this year. It was the pin that pricked an already existing bubble. It was going to happen one way or another. As it turned out, it was a pretty good excuse for doing what they did, but they did it, and they did it in spades, and they did it more than they did post 2008 in what took them a few years to do in post 2008, the great financial crisis. They accomplished in the matter of a few days this time around. It was just total shock and awe. And the metals, after an initial liquidity crunch sell-off along the lines of everything else, the metals recovered very quickly and started soaring. Then they traded sideways for a while for a number of reasons. You had to digest that first rally. But now what we've seen over just the last couple of weeks is that the metals have taken on a new life, the second stage of this big new bull market, as the appreciation for what's happened, not only in the US, but throughout the whole developed world, where they're all doing this now in concert. What that
Well, that sounds like an internet connectivity issue.
Hey, I wanted to bring this up, and it might as well be now. You know, a few weeks back, we had our annual investor summit, and Brien and Dana, you were both a part of that. On the investor summit, we talked about the fact that there was a kind of a interesting phenomenon, which is that gold was at an all-time high in every currency except the US dollar. So back then it had not yet hit its high. And so, Brien, there's been a lot of eyes watching when will gold burst through the previous high in the 1950s or 40s. That's happened. Now today we're at about 2,030 something, down a little bit over the course of the day, but still, how big of news is gold breaking $2,000 an ounce?
Well, you know, when we were talking about gold breaking $2,000 a couple of years ago, we were crackpots, and now it's happened. So now we have to look beyond that and come up with another crackpot prediction or see where it could go. And to do that, you have to look at the past to some extent to put it all into context. The previous high of $850 in 1980, that's equal to $2,800 today. If you look at silver, the previous high of $50 back then is equal to about $158 today. So bigger numbers. If you look at what happened post 2008 to the peak in 2011, the last peak in gold, the gold price went up nearly 3 times. If you look at where it went off of this last low of around $1,050, you're talking about over $3,000 if we have a similar performance in gold as we had to the reaction to the great financial crisis. There are very good arguments that this time it's going to be much more dramatic than post 2008, much more dramatic than anything we've ever seen before in modern monetary history.
Now, before we have Dana weigh on this, I want you to kind of explain to us the gold-silver ratio. Many people are familiar with that, but the fact that gold just hit an all-time high, but silver is not at its all-time high. Kind of give us some context there, Brien.
Yeah, the gold-silver ratio, obviously, well, it is gold divided by the price of silver. It had remained very elevated for a long period of time, around 90, 95. And then post the big sell-off in assets in the initial reaction by gold in March and April, gold got ahead of itself. Everybody rushed into gold, and that gold-silver ratio went to not just a new record high, but clearly overshot to the upside. It got to about 125 to 1. And now we were saying back then, and I know I said it to some of your people as well, silver is going to catch up. If you like gold, you have to love silver. And sure enough, is what's happened over just the past few weeks. That ratio, which had gotten to 125, has gotten now down to about 75 to 1 gold to silver. A big move, but the key again is if you put it in broader context, longer term context, we've got a lot more room to go. In 2011, when the gold price peaked at $1,920, that gold silver ratio got down to about 30. So if gold in this run gets up to $3,000, that means we're talking about $100 silver. But it gets even greater potential when you look at historic ratios. Of 1980, it got down to 17 to 1 when gold peaked at $850 in nominal terms. At that point, we're talking about $170 or thereabouts for silver. So a lot of room to run on silver. Again, silver offers much more punch than gold, much more leverage to gold's moves.
All right. Well, if you're just joining us, you're late. It's perfectly fine because we're recording the whole thing and you're going to want to probably catch up. But it's the Real Estate Guys on Facebook Live. We've just heard from Brien Lundin. He's editor of the Gold Newsletter, which is a fabulous subscription service. It's insanely inexpensive, so you'd be crazy not to subscribe to it. What we're going to do now is transition to Dana. Dana Samuelson's with us. He's a dealer. That means he sells people bullion and coins and so forth. So it's hard to get your mind around mining and assays and all that kind of stuff. It's worth doing. And there's some great resources for that we'll talk about before we're done. But when you start out as an investor thinking, what are the reasons to invest in gold and silver? There's a variety of reasons. You've probably collected coins at some point. I know somebody that did. Silver is pretty simple. Silver is just a small coin. This is a 1 ounce silver eagle. So this is a US made coin. And this is a readily available coin. It's easy to buy it. It's easy to sell it. Dana's in that business. Lots of people are in that business. There's reasons to own silver, and those are sometimes different than the reasons to own gold. A great thing about gold is a lot more value sits in a small place. So this is an ounce of gold. This happens to be a Canadian maple leaf, and there's some reasons you might select that. That's beyond the scope of our Facebook Live today, but this is a lot of value in a short place. I can hold $2,000 and you wouldn't even know I had it in my hand. So Dana, you have seen in the last few weeks, I'm sure, all kinds of activity. So what we want to find out from you is, because prices are up, do people have fear of missing out? Are they buying? Are people selling because they've been waiting for so long? What's going on in your world, Dana Samuelson?
Well, we are being run over by buyers, sellers, prospects, people who are interested. And it's just been crazy how much volume has been coming at us from all sides. So the surging gold and silver price have created buyers. People like to follow a market up, and we've had a lot of buying activity. We also have had a lot of clients that have had precious metals for a long time that like these high prices and are taking advantage and doing some selling. So that's a two-way market that we make, very competitive to our clients and to anyone that wants to present metal to us. We deal in fabricated metal made by sovereign mints or recognized private mints, or older classic items made by the U.S. Mint, like junk silver dimes, quarters, and half dollars from the 64 and earlier, or old pre-1933 U.S. gold coins. So we make quite a wide market, and it has been crazy. The last 2 weeks of March, when everything started to really take off, were the most intense 2 weeks of my 40-year career, and I can honestly say that the last 3 weeks have been similar. And if you look at what's driving the markets, there's three things that drive metals prices primarily. Number one is negative real interest rates. And Brien has talked about this eloquently in his newsletter. And that's where the money you would get from interest on a CD is actually lower than the inflation rate. So CDs are paying about less than 1% right now, but the inflation rate's 1.5%. That's a negative real yield. And gold does well in a negative real yield environment. That's why it started to take off last year, because interest rates plunged. And then when you have the money presses turned on like they've been turned on full blast over the last couple of months, that helps to buoy the gold price as well, because it's a dilution of value of fiat currency. And now we have a third factor, which is really what has driven the gold price to new records over the last 3 weeks, is the dollar has tanked. It's dropped dramatically on the US dollar index from over 96 to under 93. But more importantly, it's broken long-term support. And if you match up the dollar index chart to the gold chart, they're a perfect inversion of each other. One went straight up, gold, and the other went straight down, the dollar. So this run up that we've seen over the last 3-4 weeks, just 2 weeks in particular, is all dollar related. And that's because our economy is, going into a bit of a more challenging phase with the virus that is, everywhere. And we've had three big bull markets. This is the beginning or the second leg of the third biggest bull market we've had in 50 years. The first one was more US centric in the 70s. Then we had the financial crisis 10 years ago where money printing became, a thing. And now fiat currency is like the virus, if I might be so, ineloquent. It's everywhere and everybody's got it. And metals are reacting to the fact that there's not many other safe havens to go to. In the 80s, you could go out of the dollar into the euro or into the yen, and that's what happened. But everybody's been trying to lower the value of their own currency so they could export more, and have all printed money and created debt out of nowhere like we've never seen in the world before. So there's not many safe havens like there have been in the past. There's not real choices. That's why gold and silver are catching so much interest right now.
Thanks, Dana. I want to bring Russ in here for a minute because one of the things that Russ has paid attention to for the last many years is the metals, not because he's a gold bug, but because it tells us a lot. In fact, we often refer to gold as the canary in the coal mine. And it's easy for people to listen to a real estate guy show, who are buying houses and flipping properties and investing in apartment buildings to go, yeah, I don't need to pay attention to that. But Russ, gold going up isn't really exactly good news. It really means the dollar's going down.
No, Peter Schiff on a recent podcast, which was excellent, by the way, said that, while everybody's excited about $2,000 an ounce gold, it's really not something to celebrate because it really doesn't, it doesn't portend well for the average American. What it really means is the dollar is losing value. Currencies worldwide are losing value. Dana just alluded to it. The idea that central banks worldwide are printing money hand over fist, basically to save the credit markets. There's gobs of debt out there and there's no commerce. People can't afford to pay the debt. We've talked about from the very beginning of this COVID-19 crisis that we were going to go from health crisis to economic crisis where everything's locked down and cash stops flowing. And when cash stops flowing to a third level financial system crisis where bond markets, credit markets go bad, banking systems start to fail. In order to prevent that, the central banks are printing money like crazy. And to Dana's point, there's people who have dollars are like, where can I go? The system is full of what's called counterparty risk, where your asset is simultaneously somebody else's liability. And if that counterparty fails to perform, your asset's worth nothing. So gold doesn't have counterparty risk. Silver doesn't have counterparty risk for millennia, thousands of years. Both of these things have been real money, and that only has changed basically in the last 50 years. And so we're living in this experiment of paper money with no actual backing, or paper currency with no actual backing. And I think that experiment could be starting to unravel, and it's something we've been concerned about for a long time. The other thing is, the United States has been able to enjoy what's called exorbitant privilege, which means they have the ability to print as many dollars as they want and send them all over the world because the whole world wants them because it's the world's reserve currency. If for some reason the United States were to lose that, and there are big countries, big powerful forces at work, you can find it in mainstream news. In fact, we chronicle it in the Real Asset Investing Report, that are trying to undo that. If they succeed, and I'm not saying they're going to or that it's imminent, but they've been moving towards it for over 10 years that I've been watching it. If they succeed, it is a major sea change for Americans because all of a sudden, all those dollars that have been spread out all over the world are going to come home. It's just like when a company gets delisted from the S&P and all of a sudden all the fund managers sell it because they no longer need it in their portfolio. Well, all these people holding dollars in reserve no longer need it in their portfolio. And so they dump it. And that means lots of dollars spread out over slow production, which is what we have right now with an economic lockdown, means rampant inflation. And the Fed just came out and said, hey, we're going to let inflation run. We're not afraid of inflation, meaning don't expect us to raise interest rates or tighten things. And so the printing presses we expect to continue to whir. And it really doesn't matter what the real estate guys think, but the market through these prices and this price action in the precious metals is indicating people are beginning to call into question the long-term store of value of the US dollar. And that's why we call it a canary in the coal mine.
We've got Brien and Dana here, which is why we're focusing on some of the questions we're asking. I know people have been asking some questions on Facebook Live, but I want to take one right here because Mark is asking if the dollar is showing signs of crashing, which is putting the upward pressure on gold and silver prices, as you just explained, and as we've seen, why does anybody want to take declining dollars? So Dana, in your business, why would you, and specifically he says, why would someone like Dana want to take crashing dollars for gold? So I think the first thing, Russ, kind of explain why, and then Dana, explain your business model. I think it'll all come clear.
Well, we are a trading house. We buy and sell all the time. So it's not like we're holding a lot of dollars. We're just using them to buy more gold and silver with from either the industry or our clients that we can resell. So we make a margin, a buy-sell margin that's very tight compared to the industry standards, very competitive. And we don't, the only reason we hold dollars is because we get paid in dollars, and then we just increase our inventory position if we think the short-term trend is going to go higher. And the trend is your friend. And over the last 9 months, the trend has been decidedly higher. We're going to get some volatility and some corrections along the way, like we've had a mild one today. But it's not about keeping dollars. It's about increasing our inventory position.
Excellent. That's such a good point. Our mutual friend, Robert Kiyosaki, talks about cash is trash. People get the message wrong sometimes. The idea is that if you're holding dollars that continue to go down in value and have for, over 100 years, the trend is absolutely clear that every day, every week, every month, every year, your dollar's worth less. Then holding on to real assets like real estate, like gold and silver, can make a ton of sense. Russ, do you have color on that?
Well, yeah. I mean, first of all, that's a great question in terms of, I guess if you were to ask Dana, what does he save? I'm guessing it's not dollars. He earns dollars, but then probably quickly converts them into something else. And that's really the point. And I think one of the other things that is important to consider, and Brien, you probably have some input on this, I'm sure Dana does, but the fact is these are very small markets. And so as the rest of the world begins to wake up to the fact that their assets they're holding are full of risk, or potentially the cash they're holding could be losing value at an accelerated rate, as more and more people wake up and move into the space, it doesn't take a lot of volume, a demand, if you will, to drive prices up. And so I think we're seeing some of that. There's always going to be people who are holding the metal that will sell at a price because they have a need for dollars. In fact, real estate investors, I would hope, have accumulated some metals, and maybe some of them who have accumulated it maybe when it was $800 an ounce or $1,000 an ounce, or silver when it was $10 an ounce, are going, hey, I just doubled my money. Well, you didn't really, because prices have gone up. I could do a whole thing about the price of gas over the last.
But we don't have time for that because we only have 4 minutes left. So I'm going to cut off that thought. Yeah. And I want to get to the heart of this, Russ, which I think is critically important. We're going to give you some resources where you can learn a whole bunch more in just a minute. But here's the big question. First to Brien and then to Dana. Is it too late? Is the party over? Are we done? If I didn't buy already, then I'm out of luck.
No, it's not too late, and it's even ever more urgent. I've talked a little bit about how much further the metals could move. That's if you're speculating in the market. That's where that makes sense. But gold and silver are rising now because there's a groundswell of demand the world over. They see these trends that we've been talking about for some time coming to a head. And the reason to have a significant portion of your wealth in precious metals, and it's very critical to have a good portion of that in physical metals that you have access to. The reason is it's wealth insurance. Because these currencies, because of the debt loads that have been created, these currencies have to be depreciated to bring down the value of those debts. So you're buying metals as insurance for your wealth. And unlike your home insurance, you buy home insurance, you don't expect your house to catch on fire. In this case, that currencies, that the dollar is going to be depreciated. It's a certainty. So you're buying these metals to insure against that. So it's not only too late, it's ever more urgent that people do so.
Excellent. The very reason that we're seeing the metals rise is just at the start by a lot of people's estimation. Now, Dana, on the physical side, you have to be able to somehow provide that. I know you guys got pretty squeezed there in March where it was just taking a long time to actually fulfill orders. How does that look right now?
Well, the mints are producing fairly well. We have some delays in silver, which is more laborious and time consuming to make the same dollar amount of ounces of silver equal to 1 ounce of gold. It's about 80 to 1 right now, or Brien said 75 earlier. So it's a lot more time and effort to make that amount of silver. So the mints are running behind on silver. Gold has not been a problem, but with this run we've had the last couple of weeks, there's a lot more demand. So it's going to squeeze the mints a little bit. And remember, they're dealing with the virus too. They don't have normal staffs. The US Mint is making one product a week and then they're switching to something else. So the normal production capacity is a bit diminished in a time when demand is high. So it doesn't mean you're not going to get your metal. It means you just might have to wait for it a little bit. So
good point.
And,
all right. Well, what's an investor to do? We're wrapping up here our Facebook Live, and there's a lot of more resources. Maybe this is all you needed, was a cursory understanding of why is gold and silver so high. The mainstream markets aren't covering this stuff. The mainstream media barely talks about gold and silver, and they certainly don't talk about it in terms of how it relates to a real estate investor. So a couple of things. First of all, you heard Brien say, and we've heard him say this for quite a while, if you like gold, you need to love silver right now. Silver has some interesting ways to invest. Russell Gray and Dana Samuelson have just completed a 9-part series on silver, which is just coming out starting tomorrow, I believe. If you're interested in that, all you have to do is send an email to silverseries@realestateguysradio.com. silverseries@realestateguysradio.com, specifically about silver. It's completely free. The other great resource in terms of education is the Gold Newsletter. It's been in production for years and years and years. Brien worked for the founder of the Gold Newsletter, Jim Blanchard, and has taken that over, and he and his team do an amazing job. And it's a subscription newsletter, but it's crazy cheap. You can find out more about that on our website. And also, there's some reports we have under our reports library at realestateguysradio.com. Dana has a great report on kind of introduction to precious metals, from how you buy, where you buy, what things to be aware of. If you've never bought an ounce in your life, it's a great place to start. Brien also has some regular commentary and is a regular guest on the show, because these things do change. So learning, for sure, you got to learn more about it. The second thing you do, I think, is follow thought leaders. Russ, give us some ideas there.
Well, I mean, you absolutely want to do that. There's podcasts you can listen to. Obviously, you know, you probably want to listen to ours if you don't do that. Hopefully you do. But Brien has a podcast he does. In fact, I was just a guest on it recently, so that was great. And so you want to listen to people who are in the space. You know, as a real estate investor, you may or may not necessarily be directly interested, but these things are all part of the ecosystem. And I think you'll find, like I did, that they have a lot more impact on your portfolio than you realize. We love listening to Peter Schiff, schiffradio.com. Listen to his podcast. He talks a lot about gold and other things regarding the economy. And of course, he's a part of our crisis investing series, a big part of our investor summit that we do every year, as is Brien and as is Dana. So the point is that your actions grow out of your beliefs. And so what you think and what you believe will drive your actions. Your actions will produce your results. If you think that precious metals are just innate objects and rocks and have no role in your portfolio or the financial system, then you're going to act or not act based on that belief, and you're going to produce a result. But right now, I hope you're waking up and realizing, hey, there's a whole bunch of people out there obviously think there's something here, and they're putting their money where their mouth is and bidding up the price of these things. Maybe I ought to take a look. And so we think that there's a lot of real estate investors out there that haven't been paying attention to precious metals. And so we wanted to do this today to encourage you to pay attention, because it's on the move and it's happening for a reason. We don't have the time to go into all of it right now, but you start listening to people, request some of these resources, including Dana's great report at Precious Metals at realestateguysradio.com. And that'll be the beginning of your education.
All right, great stuff. Well, big thanks to our thought leaders today. Final words, Brien Lundin.
I think he's frozen.
Brian's frozen. I guess he has nothing else to say. Dana, parting words.
Well, it's great to be with you both. I just want to add a comment about where we are in the markets. I think that we're beginning in the second stage of this bull market higher. So it's not too late. You're a little late to the party, but it's just getting going. And that's when momentum traders start to pile in, and that's what's been happening now. So the potential for gold and silver to go materially higher from here still exists in quite a large degree. So I wouldn't kick yourself in the butt for not getting in early. So
I love
pay
that.
attention.
And, I like to go to a party after it's kind of rolling already, right? You show up first, it's a little awkward. And, like our party at the New Orleans Investment Conference, which, by the way, is a virtual conference this year. You get all the details on our website at realestateguysradio.com under events. We would not miss this event. It is a great place to get your mind around it. It's a lot if you're brand new into the metal space, but if you own a little gold and silver and you're wondering about different ways to play in that area, then definitely it's going to be worth your time and money to be at the New Orleans Investment Conference this year. Even though it's online, it's going to be awesome. All that's going to be missing is the fabulous music and food, but the rest is going to be there for you, a feast of information. Hey, make sure you spread this around, and you can have access to this video if you're watching live and maybe missed the first part. You can watch it on our Facebook channel or feed. You can also watch it on our YouTube channel, and spread the word about the Real Estate Guys. Thanks, Dana. Thanks, Brien. Thanks, Russell Gray. For all of us, I'm Robert Helms. Enjoy your weekend.